It's Monday again, and you know what time it is. It is Macro Monday. This is episode 4, and it is set to be an extremely busy week. So sit back, relax, get a notebook and a pen, and let's jump straight into the video. It is all about central banks, and the Bank of Japan steals this week's show with further yield curve control at the start of the week. So you have seen this rapid increase in volume in the yen crosses. Also lining up this week, we have the Bank of England and non-farm payroll. So before I jump into that, I'd like to thank the sponsors of this video. There's Black Bull Markets. They are a New Zealand-based ECN broker. They are facilitating these videos, so do go ahead, click the link anywhere down below or around this video to go ahead and get free TradingView Pro. But let's jump into the headlines. The Bank of Japan announced further yield curve control, lifting their upper band and the upper limit on their 10-year Japanese yield to 100 basis points. So we have seen this increase in volatility in the yen, and I do expect there to be a lot more yen strength coming back into the market as traders and investors now start to back the yen. So all eyes on pound yen, euro yen, as they have the biggest relative value in terms of cents to go ahead and possibly capitalize on these moves. We have the Bank of England scheduled to raise rates by 25 basis points, but it is not about what they do at this meeting. Very similarly to how I covered the ECB last week, as we have seen this general consensus slow down. Do expect the Bank of England to show some fear, reiterate some concern around data, and also reiterate their data dependency, as have the Fed and as have the ECB. If that is the case, do expect there to be a weak pound off the back of that. So do look for cable lower, euro sterling higher, and pound yen could be that biggest relative value scenario with a weak pound, strong yen. So do expect that to trade a lot lower. And then also non-farm payroll. We understand the Federal Reserve have reiterated their importance around data dependency, and NFP is one of the key figures for that, as it does show the amount of jobs added last month, right, for July. So we want to try and keep that in mind. However, folks, interesting stuff on the charts. Let's jump straight into it. Right, firstly, catching up, if you haven't watched my previous YouTube video, which I released on Thursday, which was just a recap of everything that's going on, we had this nice little lift on dollar. And just to briefly reiterate that, if there is nothing else, you have dollar. Dollar is that alternative. Dollar is still the world's reserve currency. And if there is a sell-off in everything else and recession fears start to tick up once again, you can expect the dollar to have some strength again. So for myself, going into this week, going into next week in the month of August, I'm possibly going to look on buying dollar dips to hedge that recessionary risk. So for myself, if we do see, let's put that back, if we do see 101 on dollar index once again, I would like to position myself short in the likes of euro dollar. So euro dollar was good to me in July, and I hope it's as good to me in August, because I do favor selling the rally. So euro dollar. With that being said, if I do expect some dollar strength and I'm trying to capitalize on that euro weakness that we saw, then I would like to see any rally in the euro get sold. Right, the same thing that we had last week. Any little rally in the euro got sold. I expect the same thing to occur this week with the ECB and Christine Lagarde really reiterating their data dependency. You can see that dovish euro coming into light, because 2-3 months ago they were super hawkish, right? Super confident on what's going to happen going forward. Now they're a lot more conservative. They're a lot more data dependent. They're a lot more unsure of the path ahead. So that being said, it's all about tonality. If someone firmly says they're going to raise rates in the next month or two, that shows you their confidence. However, they reiterate their uncertainty and they say that, yeah, it's data dependent, yeah, we'll see how things go. That's very negative, and that does transcribe into a weaker currency if the leaders of these central banks are not as optimistic as they should be. So euro sold off the back of that, so beautiful sell off for euro. I favor personally getting into any rally. Anything into 111 would be great. You got the likes of cable as well, beautiful sell off last week. Personally looking to sell in rallies on cable. Dollar CAD, another interest. I'm actually in this trade right now. Roughly, what is that? 17 pips drawdown. I liked it where it was, so not the best entry on that, but I'm positioning myself 0.5% risk, start the month off. This is August for me, by the way. I've already started my August. Should we have a squeeze lower? I understand it's month end. I understand it's Monday. I'm going to review this position, but I do like dollar CAD, and I would like dollar CAD to more than likely have a bid higher for it to trade higher. Then lastly, the yen crosses massive move on the yen pairs higher. Pound yen, euro yen, the biggest squeezes out of the lot, but I do like euro yen from where it is. I do think the fact that I want a weaker euro, the fact that I do expect a stronger yen off the back of this YCC announced from the Bank of Japan, I do then expect pound yen, euro yen to be the better risk rewards and the better bets to get involved in. So if you do consider euro yen, do monitor in and around this level. I do need it back below 156.50 at the very least, and then we could look to sell the rally. So if you do go ahead and monitor this, let it crack these lows, let it crack below 156.50, and any retest into pretty much where it's trading at right now, to go ahead and pull the trigger, more than likely the 50 pip stop. Don't risk too much because the volume and the volatility is quite high right now with these crosses, so I would recommend keeping that risk fairly tight. In terms of crypto really struggling right now. Bitcoin back below 30k, really stuck in this range. You know, there was so much optimism around, you know, the BlackRock ETF, but there again, not much has happened. So for me personally, I'd look for any dip into 28,000, 27,750 or 27, that's a round number, to buy dips on BTC. But it's not guaranteed. I mean, look at the likes of XRP, right? This whole move to the upside hasn't filled this wick yet. So for me personally, you know, I'm still on the belief that 55 cents will come and get retested, but I'm not gonna buy here, right? There's no risk reward up here. So let it correct. We know every little rally often gets sold in XRP. There is rumors that the SEC are trying to challenge the judges' belief that Ripple is not a security. So do expect some further volatility. But if I had to pick one side of the fence here, obviously I'm bullish long term, but if I wasn't in XRP, if you're watching this right now and you're not, try and position yourself from about 55 cents. Should be a good little price. But high focus and high interest to me, the yen pairs, yen crosses, and euro dollar, pound dollar, and dollar CAD. But that's it for me, folks. I'll keep it very short and sweet. Go ahead and click the link down below anywhere around the video for free TradingView Pro. And don't forget to click the link down below. I have a free Telegram where I'm sharing a chart of the day for free. So go ahead, check it out. Other than that, have a great trading day. Keep that risk tight. Look out for that volatility in the yen to swoop in. But stay safe. And I'll see you next Monday.